All right, guys, welcome back to the Daily Hunt. Was yesterday a trap for the markets because we saw a lot of dip buying in stocks. We even had tech pick up after the selling off, but in my opinion, we just hit a support zone and we're likely to reject. And today has been a red day pre-market. Right now, we're 2 hours before the market opens. It's 12 o'clock here in the UK. And I'm going to be covering what I think's happening in the markets, the broader context, key zones that I'm watching out for, key sectors that I'm looking to trade, and some new opportunities that I see in the markets, if any. All right, let's get right into context, market context. Where are we in the markets and what will happen in the next few days and weeks? Yesterday, we had a gap down around this level, which is around the 676 on the SPY. Then we came back up, retested the key EMAs, key resistance levels here with these trend lines that have been broken. And today we are opening shorter and lower. Okay. We're still testing this area here, which I think is a key support zone. If this is cleared, the next area is 640 to 656 on the SPY, and that would take the S&P 500 to around 6,500 in my opinion, and a drop from the all-time highs of around 10%. That's the situation. So if you were a trader who bought yesterday the dip, you are now feeling the burn. Okay. This is why you got to be careful with time in the markets here. And as you can see, testing multiple times on these highs, it's showing a lot of weakness. And in my opinion, the move on the higher time frames, when we look at the weekly, the monthly, is for this move to go all the way down to 650 here and give us a discount before we build up momentum for a new move. Even the RSI, which is just a gauge in terms of the relative strength, as you can see here, showing signs that we could dip and move to lower levels. Let's see what happens. It's looking weak, although we're still finding support and dip buyers right here. In my opinion, institutions have been selling around these levels, and retail is what who's buying at these levels. And one of the key sectors we should be watching is tech. Tech yesterday had a decent move on the bounce. So tech is bouncing here. However, there is this clear trend line that's descending, and we need to monitor the reaction here. As you see, multiple times rejected, except for this fake breakout on the 26th, 27th of January. We've seen multiple rejections here. And the support right now, in my opinion, it's short-lived because it just doesn't look like the market has room to move up. But we'll have to see on these levels if it rejects or if it breaks out above the trend line, then we'll reassess. But tech moved quite well yesterday on the bounce. And then we had energy, which I think everybody knew that energy was going to move. So nothing new there. However, the overextension, right? This overextension around here is something for us to monitor and be cautious of the mean reversion back to 54. I'm watching that for a level retake, and we need to be very, very careful here on US oil. Gold has shown clear signs that we would have a sell-off. And as you can see here with gold, huge sell-off there and rejections at the level. This is a level that I've already identified a couple weeks ago and shared in the Trend Hunters community. And you guys can see there that there was a huge rejection at these levels. And remember, there was many traders here entering on the hype that gold will rise because of the attacks on Iran and killing the supreme leader of the Iranians. And here we are with a situation where we saw a significant sell-off at these key level that I've identified many weeks ago. And now we come back down and a lot of traders and retail traders are getting burnt here. Gold was not the play. Energy was the play. Utilities, depending on which stocks you bought, were the play. And tech clearly was a decent play there. And I managed to benefit from my position in Dell. In terms of zones, I already mentioned them in the S&P 500. And then finally, I want to cover here crypto. And finally here, I want to cover a little bit about crypto. And crypto, for some reason, seemed quite strong yesterday with around 5% gains across most cryptos, around the 5%. It was give or take a few percentages here and there. As you can see with Bitcoin holding quite nicely here, looking to break up above the 20 EMA and looking to go to the next level, which is around 76. And then we have 82K here for this previous support zone, which can turn into a resistance zone in the higher time frames. It looks quite nice here, holding quite well, but we just have to be very cautious of this level being taken out and then moving down for a continuation to around 58 or 60. Again, with Bitcoin, obviously Bitcoin will drag everything with it. The next one I wanted to cover was US oil and how I see US oil developing, considering that most traders have been eyeing US oil here because of the situation with Iran. And yes, it's moving up nicely, it's moving up higher, but I think it's slightly overextended right now. And yes, of course, it can move up higher because of fundamentals and break complete structure. But I think it will come back down slowly or consolidate around this level before moving up higher. The situation isn't that great at the moment in the markets. As I mentioned earlier, we have fake outs and certain zones on the S&P 500. When we look at the weekly here, it's looking very, very nice for a short to around 659 on the SPY. And then when we look at the QQQ, which is the Nasdaq 100, it's already broken structure and it looks again like it can go to lower levels. The main reason why this is slightly weaker is because of the equal weighted and the 400 other stocks in the S&P 500 with equal weighted looking quite strong here and holding quite nicely with the S&P 500. In terms of sectors that I'm eyeing myself at the moment, I quite like the software sector for a mean reversion play, but I'm just not seeing many opportunities here for within this sector. Yes, it bounced up a little bit the last few days, and yes, it can go all the way up to 88 or maybe 95 here for mean reversion, but we are counter trend here, and it's very, very risky. The first stock that goes to mind here in terms of what we can trade in the software sector is Microsoft. Okay, Microsoft can move up to around 420. We're around 400 right now, and it looks quite nice. I've opened up a very small trade around this level yesterday with the idea that we could revert to the mean, maybe move up to 420, 410, and I'll start scaling out maybe then looking for a bounce and then a move up higher here for Microsoft. But there's many other software stocks that we can look at. I think cybersecurity can also become a big theme. And when we look at cybersecurity, yes, it's been sold off because of the software sector not performing too well. But remember, it's not just defense and aerospace and weapons. Also, cybersecurity is very, very important when you're going to war, especially in the modern era that we're living in, where I think there could also be some cyber attacks on the US and other neighboring countries. And friends of the US and Israel. And my final note here for you guys is the VIX. I mentioned it in a reel yesterday that the VIX could be a nice opportunity to short. And look, it is going to be the trickiest short that you're ever going to take. However, it's the best opportunity for one reason and one reason only. We are in a trend where the volatility is increasing because of the instability and the geopolitical reasons that we have right now with the wars and the conflicts. Volatility is increasing, but I think it will find a bit of resistance around the 29 level. If it pierces through that level and we see no signs of this coming back down, then we wait, and we try and time it for that move back down to around 18. We'll eventually go down to 18. It's just a timing issue here. And timing this during this period right now will be very, very tricky. So we need to let the dust settle. We need to get this rising to a certain level, hitting that kind of key resistance zone that we usually see with the VIX. When the RSI goes above 70, for example, when we look at the weekly chart, it's usually as well that kind of scenario where we see an overextension on the weekly, which at the moment, we're not there yet. Okay. We're nearly there, but we're not there. So we have to let this do its thing, move up higher, and then we get an even better entry for that short position with the VIX coming back down and the overall market moving back to normality. Now, your average stocks might not move, but the VIX will move considerably here once it's peaked on these charts. In terms of what I'm doing today, it's the Tuesday, it's the second day after the attacks on Iran. We had a decent day with Dell. I've been holding Dell since this zone here, shared in the community that I run, and it's been performing quite well, and it's at a key point here. I've been selling off 5-10% at a time around these zones. And now I'm thinking that I could sell a little bit more and leave the rest to run on a swing. It's moved quite well, 1 to 3.9 on this one. So yeah, really happy with that performance there. Utility stocks are doing quite well, with Duke Energy performing here for me and be quite stable. And then I have a few starter positions with Ethereum, Solana, and HBAR on crypto, but it's really small starter positions of around 1.25% risk per trade to around 0.5% risk per trade. So yeah, you're looking at about 1.5 risk in total with deep stop losses to give it time to structure, and if it needed to dip down a little bit to give me to not hit my stop losses before it moves up higher. Again, I showed you Bitcoin, but Ethereum is looking quite nicely for that mean reversion, in my opinion, 2,600. So I do see the market moving up higher here on crypto, but again, a very tricky situation to maneuver in. So I'm not adding anything. I'm just managing what I have. And I even sold my BLBD trade, which performed really well. I ended up selling around these levels. It ended up going to around 1.1 to 1, a risk reward ratio of 1 to 5. I ended up selling some around that level, 1 to 4, 1 to 5, and then 1 to 3 point something around these levels here when I kind of saw that the trend was done on this move. So yeah, holding a few stocks here, but not too much, and managing exposure, which is the most important thing right now, while the market settles and finds its final support. So if you guys are interested in finding out what we're trading in our trading community, go and join. The link is below in the description of the video. Make sure to subscribe. Make sure to subscribe as well to make sure you get your daily dose of analysis